Welcome to Checks and Balances, brought to you by Lighthouse Financial. I'm Michael Vincent. This is James Blair. And today, why rental prices are dropping and vacancies are increasing.
We're back in your life, and today is an episode based off customer feedback that I'm getting, Mike. For those with investment properties, it is taking longer to rent them out, and they are getting less rent than what they thought they would get.
Yeah, absolutely. And we all know that the market goes through ebbs and flows, ups and downs, booms and busts. And that might have something to do with it in terms of where we're at the moment.
Yes, definitely. So let's jump into the data. So we got M to go and have a look around. So realestate.co.nz has given us some numbers around Wellington, Auckland and Christchurch. So Wellington rental prices are down 8% year on year, which now they're down to $673 a week compared to February 2024. This is saving on average, Mike, renters $3,000 a year, which is great for renters, but not as much for investment property owners.
Yeah, the thing with Wellington as well is the rent is coming down while the cost of owning a house in Wellington is going up at a pretty quick clip. Like if you think about the rates increases, the insurance increases, it's going to be pretty punishing to be a landlord in Wellington, James.
Yeah, but it's not just Wellington, Auckland as well. So Auckland weekly rents are down 4% on average year on year, which is down to $689 a week, saving renters $1,560 a year. Interestingly, no, Christchurch, pretty much about the same.
Yeah, absolutely. And I think all of this points to what we're seeing in the market, right? It is a buyer's market if you are buying a house, and it is also a buyer's market if you're looking to rent a house, right? There's more supply than there is demand at the moment. Now, this doesn't last forever. Like everything goes through ups and downs. And when you're in the down, it's really hard to see the up. When you're in the up, it's really hard to see the down. You know, you just think it's going to carry on this way forever. I think let's look at the reasons though, right? So the surge in rental property availability, that's the big one, right? We've got young people staying with their parents longer. So you're not getting as much rental demand from that kind of age bracket as people try and save that house deposit more. And I think that's probably a big driver for at least a fraction of that market.
Supply is up. So Trade Me's come out with that the number of rental properties available is up 34% year on year. So last year, this time was 8,050. Now it's 10,800. 34%, Mike, that's a huge jump.
Yeah, it is. So there's a lot more supply out there on the market. If you combine that with other factors like, let's say, the rise in unemployment rate, which is up from 4.8% in the previous period to 5.1%. That doesn't sound like a huge lift, but you've got to think of all the externalities around that core number, around people who are leaving the workforce and now not looking for jobs because they think they can't get one. So there's a lot that goes into that number, right? And that will have an impact on rentals.
Let's talk about migration, Mike, as well, though, because it's another huge factor within this. So Stats NZ said 127,000 people left the country. A lot of people I talked to have moved to bloody Australia. Now, we've had 158,400 people arrive to the country, so net migration is 30,000. That doesn't sound too bad, but since the end of 2022, the peak was 137,500 in net migration. So the amount of people coming into the country net is still growing, but at a much lower rate.
Yeah, and migration into the country has propped up the New Zealand housing market and to a degree the New Zealand economy for quite some time now. Very easy to hide negative numbers or where things aren't going so well when the population is expanding and it's keeping the demand high for everything. Now that that's dropped off, I think we're kind of seeing under the hood a little bit. And actually the economy isn't in such a great shape as people think it is.
Yeah, so I think another piece is obviously interest rates, Mike. They're starting to come down, which means that maybe tenants and maybe landlords are going, well, we just want to try and retain a tenant and keep a good tenant. Our costs have come down, so we're not going to increase the rents, or maybe we decrease the rents to try and retain somebody. It kind of makes sense, right?
Yeah, 100%. It also does mean, though, that actually for some landlords, they can hold out. They don't have to take, the rent on the day. They might go, actually, you know what? I've got a couple of properties. I can prop this other one up for a little bit longer. So there is some benefit to landlord, although like I said, it is a buyer's market for renters at the moment, so they should be negotiating, yeah.
So with all this going on, Mike, there are some people doing really interesting things to try and get people to rent out their properties, including giving them free groceries. So we'll talk to you about that. after the break. At Lighthouse, we help our clients navigate the changing property market. Yes, we're talking about rents right now, but the market is always changing. It's about looking beyond that, making the right investment decisions, and not just looking at the property in front of you today, but going, what is my financial plan? Where do I want to get to long term? If that sounds like you want to have a chat about a financial plan, click on the show notes below. Now, back to the episode. So, Michael, there are some landlords who are desperate to get a tenant in, going as far as giving people groceries?
Yes, we've actually heard that people are giving $500 grocery vouchers out to some prospective tenants to get them or to try and entice them. Now, look, everyone's going to do things slightly differently. Some people are saying you can have a free week's rent, trying to entice people to their property over another. And that's the interesting point, right? Is when you are buying investment properties, you've got, I think now more than ever, you've got to be really selective about the property that you buy. And if you are, just competing on price, i.e. you're in a block of 50 townhouses and you've got one of 50, what can you do? It's just a race to the bottom in terms of price.
Yeah, a lot of danger there. So I guess my question to you, Mike, is we've talked about rents have dropped, why they've dropped, higher vacancies. My question to you, is this good that, renters have more money in their pocket, but bad for the economy? What do you think?
No, I would say it's good. I would say it's absolutely good and it's probably needed, right? And the tricky thing with the housing crisis is it's the problem that no one wants to solve, right? Because if you think about it, you've got an entire generation of homeowners who are getting wealthier by the day because their property price is going up, so they feel wealthier. They don't want policies in place that will bring down the value of their house because they're like ramping up those mortgages and doing things with them, right? So, if you ask someone, what do you think about, housing for economically challenged people? They'll say, yep, absolutely, I'm for it. And I say, okay, we're going to put a block of kāinga or flats next to your house. They go, no, not in my backyard, right? It is the problem that no one really wants to solve. And what you're seeing here and kind of the discussion we're having around, is this good or is this bad? Yeah, it's really good for a segment of society who can't afford to buy a house, who are renting to save to buy a house. Is it bad for landlords? Well, yeah, it is bad for landlords, but I'd argue that landlords have had their run for the last 20 years. So yeah, they were in for a bit of pain and that's where we're at now.
Do you think rents will bounce back? I mean, we've talked a lot about the New Zealand economy turning a corner, things improving. If migration improves, employment picks back up, do you see those rents bouncing back?
Yeah, I do. I do see rents bouncing back over time, but those are just long-term trends. Right? All we are at the moment is at the bottom of the property market, at the bottom of a cycle. Again, we know that we get about 5 to 6 years of a good cycle, and then we get 18 months, 2 years bad, then 5, 6 years. These are all just long-term trends, right? History just repeats itself. So, yep, prices will bounce back, rents will bounce back. Maybe at some point it'll shift back into the landlord's favor. Maybe it'll be too far in one direction or the other. But again, you shouldn't be looking at this on a one cycle basis. These are assets that you're holding if you're a landlord for 20 years, 30 years, 10 years. These are long-term assets, right? If you're a landlord, that's how you should be thinking about it. If you are a renter, what should you be thinking about? I would be thinking about negotiating, right? Yeah, $500 in groceries is cool, but can I get the rent down on this property? Is the property that I'm renting convenient to my work so that I can reduce my transport costs? Is it convenient to my lifestyle so I don't have to spend so much, doing other things? If I'm saving for a house, I need to be renting a property that allows me to save the most money as possible. Does it have an office that I can work from home? Because if you think about it, right, here at Lighthouse, we work from home 1 day a week on a Wednesday. Now, yep, that's cool because everyone gets to work from home, breaks up the week, and they do some admin. You can do your washing while you do the work and that sort of thing. The other thing it does is it effectively gives our employees a pay rise because they don't have to travel to work that day. They might not have to buy their lunch. They're not going to spend money going out after work. So by just giving someone 1 day a week work from home, you actually give them a pay rise. If you have the option to do that and you are renting and you're trying to save for a house, yeah, you may actually want to work from home more than 1 day a week. So look for something with an office.
Okay. I think the other bit is there was a period of time, like you said, things ebb and flow, where, the days where you'd apply for to rent a property and there'd be 50 other people who would apply and you could try and just get your hands on whatever, which means that some people are paying like a premium for a property. Well, if you were in that position, it might be, worth looking at, like you mentioned, and going, actually, this is what I'm paying at the moment. If I move somewhere else and the market is pretty dry out there, from a landlord's perspective, could I get a better property in a better location?
Yeah, 100%.
So I guess my question to you, Mike, is you've talked about the renters, but let's come back to the investors out there. What does this mean for rental yields and also investor sentiment?
Yeah, cool. So, I mean, again, investor sentiment is probably down, but actually, if we follow the Warren Buffett advice, when investor sentiment is down, that's probably the time to be buying. Because, yields will be down, sentiment's down, everyone's feeling a bit cruddy about it, interest rates are still a little bit high. Okay, now's probably the time where you should be out there buying assets, because they will be cheaper than they otherwise would be in the top of the market. You just need to do the math on it. Can I afford it? Can I hold on? What happens if it's not rented out for 6 weeks instead of 4 weeks a year? Make sure you're not making a bad decision there, but you should be on an acquisition strategy at the moment if you can.
Awesome. Okay, so a few takeaways for renters. The first one is it's a great time to shop around, like I mentioned before. So have a look at where you are now and maybe, what are the other options out there. The second piece, Mike, is we've talked about cost of living and prices increasing for a long period of time. We've been very consistent on this podcast that this won't last. And this is a real sign that that things are getting a little bit easier. Costs aren't continuing to increase at the same level. Now, Mike, when it comes to landlords, what are some of the key takeaways for them?
I guess the big one, right, is interest rates are coming down, and that's going to give landlords some breathing rooms for those who do have properties and might be struggling a little bit. So, they might be able to hold rents a little bit lower for a little bit longer without hurting their cash flow too much.
The other piece is this is where the market gets a little bit tougher, right? A really good property manager becomes really important. Where a market is hard, you need, your professionals to work that much harder for you.
Yeah, absolutely.
Great. Okay, so there you go. That's where rents are right now. Much love to Lighthouse for sponsoring this episode. Please subscribe to the channel, give us a review, give us a like, and we'll catch you next time.
Cheers.